In this video, I'm going to teach you how to start investing money, especially investing for beginners who want some financial education, and ultimately how to make some extra cash every month. You're going to be shocked at how easy it is to invest for any beginner. Investing is one of the most important things you can do for your money, but a lot of people don't really know where or how to start. But it doesn't have to be complicated or hard, because in this video, we'll show you exactly what you need and how much time it will take. So sit back and relax while we give you all the information that only takes a few minutes out of your day. Investing is a great way to build your wealth, but it can be hard to know where to start. There are many options out there and they're all different from one another. If you're looking for a good place to invest your money but don't have much of an idea of what you should do, we've got you covered. This video will show you how to get started with the basics of investing so that your money can grow over time, no matter how little or how much capital you have in the bank. I received an email from James, a viewer of ours, telling me his story on how he started investing. James overheard his dad talking to a friend about what he does for a job and how successful it is. That's when James decided he wanted to be like his dad one day. So he went online and found out information on investing money. He found out that if you invest your money, it will make more money than just sitting in an account at a bank or credit union. James was really interested because of the people he knew who had made lots of money doing this before, and they all started with less than $1,000. James is now passively making a living out of investing wisely. Let me walk you through the important steps shared by James on how to invest wisely. If you have only a little money saved up, that's okay. Investing in your money can help it grow. In fact, if you invest efficiently enough, you could eventually live off the earnings and interest from your investments. Watch this video to the end to get all the important information. You don't want to miss out on these great opportunities. Please note this video is not intended as financial or legal information and does not provide any financial or legal advice. If you need legal advice, contact a licensed attorney, and if you need financial advice, contact a licensed financial advisor. In this first segment, I'll be showing you how to start with safe investments. Be sure to keep watching this video as I will share with you the very simple step that will help you determine a successful investment. This is the most ignored but important step for young investors. Let's go. The first step to start for a safe investment is to open a money market account. Do you ever worry about saving for your future? Do you have a hard time balancing fun and savings in one budget? Well, market money accounts are here to help. A money market account is like an ordinary checking account, but it pays more interest if the balance of that account stays high enough. So even though this type of bank account might require higher deposits, they will pay much more back as well, up to 3x the amount. They typically offer access via an ATM card, which means easy spending on the go, so long as there are not too many withdrawals at once in order to avoid fees. And unlike traditional certificate of deposit (CD) accounts with fixed rates or treasury bills that must be held until the maturity date, these types of deposits can fluctuate based on stock. The next thing to do is to hedge your investment with a certificate of deposit (CD) account. If you're looking for a safe haven investment, consider opening a CD account with your bank. A certificate of deposit locks in an amount of money and pays interest on it over the course of the term. Although you can't touch the money during the time period without incurring penalties, at least now we know what's happening to our savings while they are locked away from us. You may also want to research FDIC insurance policies if these sound like terms that would work well for you. Banks typically offer CDs with different minimum deposits, so there is one out there suited just right for whatever kind of investor or saver you are, be it conservative or risky. Did you know that real estate investing is a greater risk and is divided into active and passive investing? Keep watching to find out. Let's first finish starting a safe investment. Another important step is picking stocks in companies and sectors you understand. As a beginner investor, you don't need to be an expert on the stock market. You can start investing in stocks by using plans that let you skip broker fees and commissions, such as dividend reinvestment programs, DRIPs, or direct stock purchase programs, DSPPs. Even if your monthly investment is only $20 to $30, it will still grow over time. I will put a link in the description with a list of companies that offer direct investing with no fees. The next thing is to diversify your portfolio with a mutual fund. Mutual funds are like the stock market on autopilot. You would choose all of your stocks, bonds, and commodities for them to invest in without having to worry about those pesky details yourself. Since they're diversified, you'll be much safer investing long term because it's unlikely that all of the investments will fail at once. So if one did go south, south, you have others invested elsewhere that could help offset any losses incurred by this particular investment going belly up. So whether you use an advisor or buy shares directly from the fund itself really just is personal preference. But either way, make sure not to put too many eggs in one basket, or should we say mutual fund. Another step for a safe investment is to open a retirement account. Retirement accounts allow you to save for the future with tax-free contributions, and employers may provide benefits such as matching funds up to a certain amount per year. The most common options for retirement savings are 401ks and IRAs. A 401k is set up through your employer, where you can open an individual IRA at the same time. Aiming for maximum employer matches on 401ks is one strategy that will help you get ahead in the long term. Additionally, traditional IRAs have some good features too. $5,500 yearly max contribution without paying fees now. You'll pay them though when withdrawing money during retirement. Another step is to buy bonds to generate steady income, but be sure to invest in a variety of bonds to ensure a steady income. Bonds are fixed rate securities that allow you to make money no matter what happens with the market. The face value for most is at least $1,000, so it won't be easy or quick until you have more investment funds available, but it is worth your time and money. Lastly, for safe investments, you should use gold or silver to hedge against inflation. You might be wondering, what's your best bet? Putting away money that will grow over time. Investing in gold and silver provides a smart way to hedge against inflation, but it's not without its drawbacks. Gold and silver tend to move in the opposite direction of the market, so they can work as a safeguard if you invest elsewhere. However, this doesn't come with any tax benefits or easy storage options, because these metals are difficult to store securely if quantities reach any significant level. In the next segment, I will show you greater investment risks but can reap the rewards. Keep watching as I'm about to share my easy #1 tip on having a successful investment. The first step in taking greater risk is diving into real estate for long-term investing. When it comes to investing, one of the most popular ways is through real estate. Long-term real estate investments can either be active or passive. Active investment is riskier because properties are not very liquid and it might be difficult to sell them if you need to dispose of the property quickly. Passive investing, such as buying shares in REIT, may offer less risk for people who want an introduction into this type of long-term investment strategy that has been shown to have solid returns over time with low downside potential. Another high-risk investment is to move into the currency market if you like a challenge. Currency market may seem like a challenge, but you'll reap the rewards if you try. FOREX is one of the largest markets in all of finance and operates on geopolitics for its success. You'll need to read international news daily so that when opportunities arise, you will be on top of any opportunities. Focus your attention on 2 or 3 currencies at most, because more than that will only make things harder by overcrowding your brain with information about every country's economy rather than focusing on those which are important today. Another risky investment is to trade options to limit your exposure. Options are contracts that represent the right to buy or sell an asset at a certain price in the future. Since traders don't have any obligation for buying or selling, their potential losses are limited only by what they invested into purchasing these rights. To start trading options, you'll need a brokerage account which will set limits on your ability depending on how experienced and risky of an investor you might be, as well as what amount is available in your portfolio currency. Let me now show you some of the things you can do to lower your risks. One is to practice hedging. The idea behind hedging is to offset the potential for losses in one security by simultaneously investing in another that moves opposite to it. If you are looking into more aggressive, shorter term investments like stocks or EFTs, exchange traded funds, financial planners and advisors can help design a strategy for your portfolio where they will hedge against any possible loss in other securities, which would also be expected to move in the opposite direction if certain conditions were met. Another thing to do to lower your risk is to diversify your portfolio with commodities. Commodities can be used to hedge against risk because they tend to behave differently than stock markets and currencies. However, they are risky because you'll need a lot of research before deciding what commodity is best for your needs. Some may react better under certain circumstances, while others will fail miserably. There are hard commodities such as precious metals or soft commodities like wheat or coffee that come in many different forms. Buying the actual physical item, investing shares into companies who produce them, or even trading futures contracts which require less capital but could lead to bigger losses if not done right or at all. In this next short segment, I will show you how to set yourself up for for success as an investor. But first, I will share with you my #1 tip on succeeding as an investor. The very important, easy tip for succeeding as an investor is to write down your investment goals. Without these critical pieces of information, your investment strategy is incomplete and could lead to a loss in the long run. There are short, mid, and long-term goals. Figuring out what you want to have happen with your investments and then figure out the best strategy for that. A very sensible tip to set yourself up for success is to build up an emergency fund. You should have a safety net for yourself and your family in case anything goes wrong. Aim to save up 3 to 6 months worth of living expenses so that you'll be covered if disaster strikes. The money needs to be easily accessible but separate from any of your investment accounts. Get a debit card specifically dedicated just for this fund, because then you can access the funds when they're needed the most. Another important tip is to pay off high interest debt. You might be thinking that you'll need to pay off all debt before investing, but it isn't necessarily true. Consider paying the high interest credit cards and personal loans first, since they typically carry a higher interest rate than mortgages or student loans. If your goal is to invest as much money as possible and get the biggest return on investment, then you'll want to keep those lower rate payments current so that when tax season rolls around, more of what you earn can go into your savings. One final important step that will help you set yourself up for success is to consult a financial planner. A financial planner can help you with making your investments. They're not necessarily the only people who should be involved in investing, but they are experts on market trends and investment strategy. If you don't have a team of investors yet, or if this is your first time trying to invest wisely, then it's worth talking to one now before too much money has been lost because of an uninformed decision. Take a look at the playlist on the screen to see some other mind-blowing investment hacks. If you found this video helpful, please like, subscribe and comment and share it so other people like you can find this video on how to invest money.